Again, if stocks are sort of getting antsy about this, or traders, they have a funny way of showing it. We're now at session highs. What's going on? Market watcher Larry Shover joining us now. What is going on? What do you think is going on here?
Well, you know, there's been a shift in psychology in the market. People were big fans of the S&P 500 crossing that 2,300 mark, which is 20,000 basically in the Dow. But not to have a retracement has gotten people really anxious. And so we're back to that chasing mentality, waiting for that turnaround in the market. And, you know, with all the noise, with all the dense and rich and deep Twitter feed that we see all day long, we're missing the fact that corporate profits are rising, the fact that PMIs are up, business confidence is up. So all these things have helped produce a 4% year-to-date performance for the S&P 500.
But, you know, I noticed as well we had wholesale inflation running up 0.6% in the latest month, double what was expected. And then I'm hearing Janet Yellen talking about a pace of rate increases that could be more than earlier thought. I'm paraphrasing and oversimplifying. But how do the markets climb in the face of that?
Yeah, it seems like the market just doesn't care. It's shrugging its shoulders at the fact. And the fact is, I think they're looking at the bigger picture and realizing that right now that's an okay thing if we run a little hot. I don't think we will, but maybe she suggested or insinuated that, and that's okay. I mean,
well, how would the markets absorb? I'm sorry, my friend, but how would the markets absorb more than just a few rate increases? What if it gets to be, you know, maybe 5 or 6?
Well, yeah, well, 5 or 6, then I think we're in trouble because we're running way too hot. And that's certainly, you know, an outlier, although outliers do happen. I think if we have 3, that's trouble enough because the market right now is building in 2 and building it in for good reasons, the right reasons. You
know, you're right. I was looking at these Fed fund futures contracts, which you know better than I. But we're starting to see expectations, maybe based on her remarks today thus far, that maybe they're being conservative. Maybe we'll see more. What is the limit you think the market could stand, though? Because obviously they see tax cuts coming and they want them to be big, but they could be offset by interest rate hikes that could wash them out, right?
Yeah, absolutely. And back to the point of capital expenditures. I've been on Fox for 7 years. I've never seen a rise. I've never said that on TV. It's kind of neat to say that. But, yeah, I think the market could withstand 3 hikes. Anything more than that, obviously, it needs to be for the right reasons. But beyond 3, then that would spell trouble for the markets because then it becomes a relative game. People talk about valuations of the S&P being too high, and I would say, well, that's not true. It's on a relative basis, it's okay. I wouldn't be long duration right now. But, yeah, more than 3 hikes would spell some trouble.
Do you think the rate hikes that we've seen, even the market rate hikes that we've seen, the 10-year now closing at 2.5%, that maybe of this great boon for housing and real estate, maybe even though I can certainly remember rates a heck of a lot higher than these levels, there's a whole generation of young people who don't. And for them, it's jarring. And for them, it's disqualifying to get a mortgage, and it could disrupt this whole thing. What do you think?
Yeah, well, I think that the 10-year, the 30-year, the long end of the curve, we're not going to see a whole lot higher than we're seeing right now. I mean, definitely could see the 10-year yield up around 2.75%.
Really?
But we have to remember, we're in this long grinding cycle. People continue to think we're going to have a recession and it's the end of day. But we're in the midst of an $11 trillion monetary experiment that's never been attempted before. So I think like a 4% GDP, now it's 2%. 2% is the new 4%. So I think, you know, when you have a 10-year yield up around 2.75, we can withstand that. But I just don't see it running much higher than that this year.
All right. Thank you very, very much. Good seeing you again.
You're welcome.